Have you ever wondered why your business is bringing in all this revenue and at the end of the month, it's not in your bank account anymore? Well, you're not alone. If you're like most business owners, you're following the traditional formula of sales minus expenses equals profit. But here's the thing, that formula is a little backwards and it's part of what's keeping you broke. So in today's video, I'm going to show you this cash flow trick that will fix your business and help keep you profitable every single month starting right now. I'm James Masotti. I'm the owner of Our Team Accounting. I'm a real estate investor and the owner of Crystal Clear Property Management. On this channel, I am passionate about helping business owners, entrepreneurs achieve their personal and professional financial goals through intentional financial planning. So let's go ahead and dive right into today's video. All right, so the traditional formula is broken. Sales minus expenses equals profit. This is what's keeping you broke. Now, if you talk to most accountants, they're gonna look at me and they're gonna be like, this guy's an idiot. He has no idea what he's talking about. But hear me out for a second. I would rather you think about it from the perspective of sales minus profit equals expenses. That's the right way to think about this formula. And it's going to dramatically change and improve your business in ways that you can't even imagine. Here's the thing, mathematically, they're identical formulas. But as human beings, we prioritize what we think about and what we see first. And so when you think about your sales and your expenses, what you're doing is you're kicking the can on profit down the road. That profit is what is left over in your business. That you have to have those expenses in order to generate profit. Instead, if you think about it from the perspective of, I need to generate revenue so that I'm profitable, and here are the expenses that I can afford in order to achieve that, you are going to be much better off in your business. So let's talk about how we're actually going to go about implementing this change so that we can psychologically behave differently and ensure that we're going to be profitable every single month. When we're thinking about this process, one of the things that we're going to be doing is we're going to pull a note out of grandma's past and we're going to set up some envelopes for your business. Now, in reality, you're not going to start converting all of your money into cash and start stuffing it into little envelopes and writing names on and being like, okay, this is what this is going to be, right? But we're going to do the modern day business equivalent of that exact same thing, which is we're going to have separate bank accounts that we're going to put our money into. And why we do this is that most small business owners operate through what's called bank balance accounting, right? It's not the generally accepted accounting principle GAAP accounting rules. And profit first is not a different form of accounting. Literally all we're doing is we're changing how we think about how we are going to spend our money and physically where our money exists. So what we're going to do is we're going to have all of our money come into an income account. But before we do anything else, we're going to make sure that we allocate that money first to our profit. Second, to paying the owner. Third, to making sure we have money set aside to pay all of the taxes for the business and the owners. And then we will have money left over to allocate to all the rest of our operating expenses. All right, so let's run through kind of a real world hypothetical example of what this will look like. So if your business has $20,000 a month of revenue coming in, let's say you're gonna allocate 10% of that to profit. That's gonna be $2,000. You're gonna put that into a separate bank account. Then let's say we're gonna put another 20% set aside for what you're gonna pay yourself as the owner for the work that you do in the business every day. That's $4,000 that we're going to set aside. Now, we also need to make sure that we can pay taxes for the fact that we're going to have a profitable business because we've decided we're going to, and we've set aside our profit already, as well as the taxes that we're going to have to pay as the owner and of our wages coming out of the business. And we're going to be conservative and we're going to assume that that's going to be another 15% of the business, of the revenue for another $3,000. Now, this leaves us with 55% of our revenue left over, which is $11,000 that we can spend on the rest of what's going on in our business. And if you're sitting there thinking that like my expenses are more than $11,000, then this is where I'm going to challenge you to think about where are you spending your money, why, and what value is it bringing to the table? Because if you really set these guardrails up, if you really put these priorities in place, then what it's going to start making you do is think about how can you do things with the resources that you have available. Instead of just signing up for every new subscription because it adds a little bit more to you, or instead of thinking about like, oh, I need to have this great new tool, or I'm going to bring this thing on board, start to think about like, hey, can I rent that? Can I lease that? Can I exchange my services, at a discounted rate in order to achieve more favorable pricing for that, right? Start thinking more creatively, especially in these early times, right? Most businesses go out of business, long before they reach $1 million in revenue. Most businesses fail within their first 5 years. And so the name of the game when we're still in this early stage and we're small is to focus on making sure that we have built profitability into our model so that we can grow, so that we can scale, and we can do it in a way that we're gonna beat the odds and we're gonna stick around for the long haul. So I'm really interested to know, what are your biggest issues with cash flow today? Is it understanding where your money's coming from, going to, the timing of all of that? Is it, what you're spending your money on and whether it's adding value to your organization? So go ahead and drop something in the comments below, and I look forward to helping out however I can. So now we're going to talk about why this change actually works. And the principle at play here is what's known as Parkinson's Law. Parkinson's Law was developed by a gentleman with a fantastic name of Cyril Northcote Parkinson. And here's a great picture of this lovely gentleman. He was a economist for the British Royal Navy. And what he established is this theory of, the work expands to meet the available amount of resources, right? And what that effectively means is that we are going to consume what we have available to us. So we're going to take this big pot of money, all the money that comes in from our income, and instead of spending all of our money right out of that same bank account so that like we can't keep track of things of like, oh, I have this bill coming up in 6 months. I need to make sure I still have money set aside for, or, I got payroll coming up. I got to make sure I can pay that. And, I got to make sure I can pay myself. And then I've got money set aside for taxes, right? Like you've got all these different things. And the way that our brains are wired is most businesses, small, medium-sized businesses, don't actually run a budget. But even if they did run a budget, what they're typically not doing is like every time they want to make a purchase decision, be like, okay, am I running my financials on a cash basis or an accrual basis right now? Hint, most businesses don't actually do accrual-based accounting. So you're not going to see the fact that like you have this insurance bill or this, major annual or quarterly expense coming due because it's not hitting your cash-based accounts right now, right? So you're not setting money aside for when you eventually have to pay that thing. You're going to try and do all this stuff in your head to figure out, hey, can I afford to, attend this conference or buy this plane ticket or this new piece of equipment or whatever it is. And that's the process that the vast majority of small business owners go through in order to figure out whether they can spend their money or not. And so what we're going to be doing is we're going to be removing the temptation of just having this big giant bucket of income and everything thrown into one spot. And we're going to make it so that you know exactly how much money you have to be able to spend, because we're going to set aside money for your profit. We're going to set aside money for your owner's compensation. We're going to set aside money that Uncle Sam has let you borrow, because let's face it, it's not your money, it's theirs. And if you want to see what happens when Uncle Sam decides they want to take your money, it's not pretty at all. I used to work in payroll and I saw IRS wage garnishments, and it is ugly. I'm going to tell you, not something you want to mess around with. Whether you like paying taxes or not, work with your tax person, figure out a good tax plan, tax strategy, minimize your taxes as much as you possibly can, but understand you're going to need to pay Uncle Sam. So when I say set aside 15%, that is the safest way that you can do that wherever you are in the world. Here's the thing, set aside 15%, because guess what? If you've got extra left over, who here doesn't like Thanksgiving leftovers? Everybody does. That's what your tax account, that's your Thanksgiving leftovers. When you have extra tax money set aside, that's when you get to go on vacation. That's when you get to buy the new bowling ball, because who needs golf clubs? Everybody needs new bowling balls. So we're going to make sure that we're going to remove all of the temptation by setting all this stuff aside. And then we're going to have an account specifically set up for this is where our monthly operating expenses are going to get paid out of. And when that gets a lot smaller, you're going to be more critical about where you're going to spend your money and ask yourself the questions of, can I justify that expense, and how am I going to get money back out of it? Doing your company's accounting on your own can be overwhelming and time consuming when you're trying to run your business at the same time. If you're interested in learning more information about our do-it-yourself and done-with-you group coaching programs, or if you're interested in taking your services to the next level with our fully outsourced accounting solutions, getting help with implementing Profit First, or even fractional CFO services, go ahead and scan the QR code on your screen or click the link in the description below to find out more about these programs and how we can help support you. All right, so to make Profit First work, what we're gonna be doing is we're gonna be setting up at least 5 bank accounts. You could absolutely set up more, but unless you're working with a Profit First professional, I strongly encourage you just to stick with these 5 to get started with, get used to the process, get used to the behavior of doing this, because again, this is not in any way changing accounting. It's not changing how things flow around. If you're using a tool like QuickBooks, even the fact that we're gonna be talking about like transferring money back and forth and stuff like that, like we're talking about adding 10 extra transactions a month, and they're all gonna auto match inside your QuickBooks because they're just transfers amongst each other. So like this is not gonna add significant complexity to what you're doing. So if you hear people telling you that, I'm telling you, they're wrong. All right, the first thing, where your money comes into, that's your income bank account. So it's probably the account that you're starting with today because that's where all of your customers are already paying you from. And to be honest, you probably don't wanna mess around with changing that, making it difficult, having confusion and all of that. If you need to, you absolutely can change that to a different bank account, but that's where your money's gonna come into. But we are going to pay nothing out of that account. It's just for money to come in. Then we are going to allocate our money into the other accounts. So the first one that we're gonna set up, we already talked about, is going to be your profit account. So this is where you're going to start accumulating some of those profits that you've guaranteed that you're going to have. If you're saying to yourself right now, like, hey, I'm already not profitable, so how am I miraculously going to all of a sudden achieve profit? And, you might be thinking like, I'm at 0. You said 10% of my money. You may not be starting with 10. Maybe it starts with 1%. Maybe it's 2%, right? Like we have aspirations, we have goals of where we want to be able to get to. And you can go research. I'll actually put up on screen right here. I don't know where we're going to get it on there. Is what's called the Profit First target allocation percentages. And these are broken up by revenue buckets on where you can try to grow these things over time. But just understand, these are targets, best in class targets. These are by no means where you should be today. And so start from where you are. You can look at, where everything is, and just start with where you're at, right? Because if you're not profitable, there's basically 2 reasons. So reason number 1 is that your expenses are too high. Number 2 is that you are not charging enough for your services. So your margins are not significant enough so that you have profit left over at the end, given your expense load. And so this is a very common thing early on in business, is that business owners, when they're building out their costs, they'll be like, okay, if I make this much money, here's what I'm going to pay myself. Here's what my expenses are. And they kind of start ticking off these things. And then they're kind of like, oh, and then I'll be left over with this much and I can live off of that. And that's what so many business owners, how they start their process. When in reality though, you have to think about, okay, well, as I'm going to grow, I'm going to need to add staff members. And that staff member is going to be wanting to get paid $20, $25, $30, $50 an hour, whatever it is that they're going to be getting paid when you factor in the taxes you have to pay for them, their benefits, other expenses like computers, healthcare, any of those things that you're going to end up paying for them, right? And when you factor all that in, like you still need to have profit built in on top of that. And so if you're just like, oh, well, as long as I make 30 bucks an hour, 40 bucks an hour, like I'm good. No, you should be charging then 80, 90, $100 an hour for your services, because if you're not getting 2 to 3 times the return on your labor, plus your materials and all of that other kind of stuff, then you're not going to have enough money set aside to pay you and then to also have profit left over. And so you have to be pricing your services correctly. And in the beginning, it's very easy to get stuck in the trap of keeping those things low so that you can just get where you need to get to and kind of get things started. All right, so we just covered the profit account. And so now we're gonna start talking about our owner's compensation account. And this is all about the pay that you as the owner are actually gonna be getting paid on a regular reoccurring basis for the work that you are doing in the business. So your compensation as an owner should be commensurate with all those different hats that you have to wear. And this is not only for yourself, but also for think about like if a lot of small business owners will eventually start setting up themselves as what's like an S corporation for tax election. And there's a benefit between like what you pay yourself as W-2 wages compared to what you take as owner's distributions. And that's a tax optimization thing. And so what we're referring to here isn't necessarily like those differences, right? Like this is the compensation that you should be receiving, and how you split that out, like arguably can kind of be different things, right? So what we're referring to here, right, is like what you should be paying as a W-2. And if you talk with your tax professional, this is partially like the test that they're going to tell you, is that the IRS kind of has this rule that says like it has to be a reasonable wage. And so if you think about like what you should be getting paid, right? Like figure out all those different hats, right? You spend X number of hours, working on a job site, you spend X number of hours doing marketing, doing sales, doing whatever these things are. And if you had, you might be getting paid $25 an hour for one of those jobs and $35 an hour for another one and $50 an hour for another job. And you can kind of blend all of that together in order to be able to say like, hey, for all the hats that I'm wearing and all the different things that I do, like here's how much I should be getting paid. And you should be setting aside that money into your owner's compensation account so that when payday comes, you as the most important employee in your business are getting paid out of that money. Now, the good news here is, right, like this is based on a percentage allocation coming out of your income account. So as your income rises, there should start to be building up a surplus in this owner's pay account that's greater than the amount that you're actually paying yourself. The next account is probably one of the least fun accounts that you're gonna have set up, but it's honestly one of the most important accounts to make sure that you can sleep really well at night. And that's your tax account. And here's the thing, one of my first jobs that I had, honestly, before I even graduated from college, was working in the payroll department for a pretty large company, had tens of thousands of employees. And the role that I played in that company was in the wage garnishment department. And the number of times that I saw IRS tax levies come through and basically be like, hey, you haven't paid your taxes. We're just going to take everything. We're going to freeze your bank accounts. It is scary the amount of power that the IRS has in order to make sure that they get paid. So here's the thing. You're going to have to pay Uncle Sam. Absolutely work with your tax professional. And again, go watch my video. There's a difference between the person who's preparing your taxes and the person who's doing your tax strategy. If you're not generating several hundreds of thousands of dollars in net income or again, profit and owner's compensation distributions, you might not be fully ready for like true tax strategy and planning optimization conversations because they may just simply be too expensive to really get any significant benefits for you. But if you're not at that point yet, then what we're going to do is we're going to kind of be pretty conservative here. We're going to set aside 15% of your income for tax purposes, right? So this is going to be, whether you have to make quarterly payments, quarterly estimated payments, or just at the end of the year, we would rather have you have that money set aside that covers, basically any of your personal income tax that arises from what you have, had to taken out, that is your money. Like we want you to be made whole. And so your overall compensation should not only include that, but kind of also like paying you back for the taxes that were taken out of your pay. And then we're getting into the fifth and final of the traditional core 5 bank accounts from a profit first perspective. And this is our operating expense account. And this is basically where we're going to pay all of the other expenses that we've got in our business, right? So we've set aside our profit, we've set aside our owner's compensation, we've set aside our tax, everything else gets moved into this account, and that's where we're going to pay everything else. There are absolutely some advanced profit first strategies and some other bank accounts that we can open that are a little more unique to specific types of businesses. But for the most part, this is now where we're going to pay all of our expenses, whether that's our employees' compensation, insurance, rent, vehicle expenses, software subscriptions, any of these sort of things, right, is all going to then get paid out of this operating expenses. And this is where you have that great opportunity of being able to see what's left over and build a budget off of that and figure out how am I going to be able to do these things, right? You might have to get crafty and you might have to figure out like, all right, I need a part-time person because I can't afford a full-time person, or I might need to barter for services and exchange this service to somebody else and see what I can do to get myself a deal, right? So that I don't have to pay out cash and I can have other ways of compensating for things, right? You might have to go and look at, trying to figure out like, hey, like what volume incentive pricing can I get where I can get rebates on things if I hit certain thresholds and in order to cut costs down. All of these sort of things are the things that you want to really be looking at to control your business's costs and make sure that you are living within your means. All right, so now that we've gone over the 5 primary accounts that exist inside the Profit First system, if you've kind of been listening to what we're talking about, this is not necessarily a new accounting methodology, right? Like we're not doing anything that's necessarily different from, what you would need to do in order to maintain GAAP compliance, right? The generally accepted accounting principles that the IRS says that you have to follow in order to, submit your expenses, or that auditors or banks and insurance people are all going to look at, right? You're able to kind of do all of that stuff still the same way. But what this is doing is it's acknowledging the fact that most businesses and business owners, they're not living inside of their financial statements, right? As you grow your business and you get to the point where you're really elevating yourself to a CEO level position, you absolutely need to understand how to look at and dissect your financial statements. You need to understand the key drivers of what's going on in your business, and you need to be able to run and manage your business off of those documents, right? What we want to make sure that we're doing, like for a lot of these like small business folks, is we want to build you up to a point where you have the financial acumen and comfort level of being able to understand how to use and leverage your financial statements in order to help you drive the business in the direction that you want it to go. Until you get there, though, we want to leverage the behavior that you as a human already have in place. And for the most part, that is checking your bank balance and being able to understand, as we call it, it's grandma's envelope system, right? And so grandma would put cash into an envelope, and then when there was no more money in the grocery envelope, well, guess what? You didn't take it out of the rent envelope because, well, you still had to pay your rent. If you didn't pay your rent and you lost a place to live, like what were you going to do, right? So you when the cash in the envelope for groceries got really low, what'd you do? Well, you started eating beans and pasta and rice and peanut butter and jelly and, all that other sort of stuff, right? In order to make it last until you got your next influx of cash. And this is kind of the business equivalent to being able to look at and understand, where your business finances are visually without having to do a lot of thought and a lot of thinking. We want to automate this process as much as possible. So when I hear people talk about I'm going to do it in spreadsheets, or I can just do this on my balance sheet by creating reserve accounts and things along those lines. Again, as a business owner, you don't pull out your phone and go, oh, let me check my spreadsheet, or hold on, let me go run my balance sheet report and check to make sure that everything is coded correctly and all my transactions are posted and up to date so that my balance sheet is real time. No, what's real time? Your bank account balance, right? Now, what you don't obviously have is what's all the things, obligations that you've committed to, for which the invoice hasn't rolled in and you haven't paid the vendor. Like there's always this kind of thing. But what I'm telling you from a behavioral standpoint, what we know to exist and to happen in reality is that owners live off of their bank balances. And so by being able to separate out and allocate all of the money into these different accounts, it helps really streamline and prioritize the fact that you need to be building a profitable business, and that you only have so much money to manage your expenses, and that you need to make sure that you are pricing properly to factor in all of those other different things. Now, what we also don't want to necessarily have happen as part of this process, though, is that you're sitting there and you're feeling like I got to be making transfers, and that you're babysitting your bank account, and every time money comes in that you're transferring that money all the time. Don't want to do that. We want to create a behavior around this, right? There's really great, concept documented in the book Atomic Habits by James Clear that's called behavior stacking, right? And so we want to create a behavioral process and things that we can really link to in order to kind of drive the results that we ultimately want to see. And so as we think about trying to reinforce that behavior, you want to think about pre-existing times and places that you already have, where you have a process in place that you're already following and that you can, get behind that. If you don't have one and you need to set one up, then in Profit First, what we recommend is that you do this twice a month. We call it the 10th and the 5th and the 25th of the month. So on the 10th of the month, you're going to take the money that's in that income account and you're going to use your percentages and allocate it out across the other bank accounts that you're going to be putting money into. And then you do that process again on the 25th. Now, if your business has specific windows of time where, all of your invoices are getting paid and you've got a big lump sum of cash coming in, or if you have significant vendor payments that are due on a particular day, this 10th and 25th of the month is a guideline, right? Because it roughly splits the month into thirds. And so they seem like good spots to start. But again, make adjustments to those as you need inside of your business. If you go with one of the Profit First official banking partners, either Relay or Impressia, then these two banks actually have this functionality built right in. So you can have automatically scheduled based on your profit first percentages, and it will automatically transfer money from those income accounts into all of your other accounts. And you don't even have to think about it other than, monitoring your percentages. And then as you need to tweak those, we recommend reviewing that and tweaking those on a quarterly basis if necessary, or as necessary. Then you update that in those systems, but then the transfers themselves kind of happen automatically and you don't have to think about it at all. And so if you go through this process, it's going to potentially create a lot of anxiety initially, right? Because you're going to look at things and you're going to think about like, oh man, I am like way overspending on a lot of these things. And that's an okay and that's a good experience to have because that's what a lot of people ultimately go through, right? And so when they start realizing this, it really makes them have to second guess a couple of things. First, what expenses do I really need to be having in my business? And so, not only that, it's also kind of like, am I pricing my services correctly, right? Have I factored in all of the right things in order to, compensate for what I need to be driving in my business? And when you go through that exercise, it also makes it a lot more easier, to when you go to a customer and you're presenting on your pricing and your value proposition, when they start to ask questions about why it costs what it costs when there's this other person who can do it for cheaper, you can now stand there a lot more confidently and be able to say, not that you're going to share with them like, oh, I have this very specific profit margin built into my business, right? But you're able to more confidently say, hey, I fully understand your concerns. What specific elements are you concerned with, right? And when they start sharing with you like, oh, well, I think this and I think that, you're going to be able to really, speak more confidently on like, yep, this is what things cost. I've got my team to pay for, and I've got, this insurance and, the overhead and all of these different components, and then on top of all of those expenses, like I still need to make money as a business owner. And we feel like this is a very competitive, very fair price that allows you to get the high quality service that you need. And again, you can imagine it's a lot harder to have that conversation if you don't know your numbers and you haven't kind of drilled into being able to segment these things out. It's also a lot easier when you go on the job site to kind of feel like, I say job site because again, we've got a lot of construction home service clients, but like whatever your product, your service is that you're doing, it's a lot easier to think about like, oh, I can spend a little more time here, or I can buy this thing, or I'm going to do that. And like, without being able to really document and capture all of that. So the system may create some anxiety initially, but I promise you, and this is really where like having a profit first professional and a coach working with you and guiding you through the process to help you understand like what you're going through is normal and that they're there to help support you is one of the biggest areas where like we see people go through this process and be like, oh, it doesn't work, right? And they do that because it's the exact same thing as like when you make a New Year's resolution to go to the gym at the beginning of the year, right? It's not that gyms don't work. Like working out is a thing. It works. Like there is plenty of science that proves that. What breaks down for a lot of people, right, is that it's hard in the beginning. It doesn't feel good. You don't feel supported. You don't have all of that sort of stuff. And implementing profit first and going through this behavioral cash management transition is not that different. It's a learning experience and you need a professional to help guide you through how to do a lot of those things. You may not. There's lots of people who go to the gym very successfully without having a gym buddy or an accountability partner or a coach or any of those sort of things. And if you're one of those people, then you can take this and you can absolutely run with it. But it's important to kind of know and understand yourself in order to understand, what it is that's going to allow you to be successful going through this transition process. And so now that we've kind of set up this framework for being able to understand, what is ultimately breaking down, we've got these expenses and you're sitting there and you're scratching your head thinking to yourself, all right, I've got way too much here. What am I going to do about this? I want you to go ahead and click on the next video where we're going to dive deep into how do you actually review those expenses, figure out what's adding value to your business, what you can cut so that you can ultimately get the business generating the profit that you want it to see. I look forward to seeing you there.